Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, a daily arbitrage missed opportunity. This daily arbitrage is a really handy tool, folks. I still owe you all a much deeper dive into what goes into calculating the daily arbitrage factor score. But let me tell you, when you have the insights into what the market should be doing on a given day based on 7 different variables, then you are way ahead of the game and can triangulate a profit-making trade against what is actually happening versus those expectations. Today, for example, we woke up with futures pointing to a lower open after another melt-up rally on Friday. This was interesting in and of itself because the daily arbitrage factor score came in exactly at 0, suggesting a flat move, a sideways move for the markets today. So at the time the score was calculated, you had futures down anywhere between 25 and 50 basis points, and an arbitrage opportunity present right out of the gate. Unfortunately, those potential arbitrage gains dissipated as we headed into the open, and the buy the dippers, as one might expect, really decided to push stocks closer to that flat line that was predicted by the daily arbitrage score. So you can see here, by the time we opened at 9:30 Eastern time on the Spider S&P 500 ETF, we were down just about 15 basis points. For the first, 10 minutes of trading, we did dip a little bit lower. We got close to 20 to 25 basis points. I think it was right at 20 basis points lower, and that was the low for the day, and then a big reversal. What was I looking for? Well, when I'm looking at triangulating an arbitrage trade, I'm usually looking for at a minimum 25 basis points that I can exploit of based on what the market is versus what my expectations are. So in this particular case, I was close, 20 basis points to the downside, but I wasn't quite there. In fact, I really did expect selling to accelerate in the first half hour. Um, Friday's triple witching hour option expirations resulted in stocks being closing at a much higher level than they really should have. And futures were pointing us in that direction. So, anyway, I had made the decision that I was going to enter a trade once we got to any point down 35 bips on the SPY or greater. Didn't get anywhere near that, and the market reversed. That's the missed opportunity, obviously. Went right back to the flat line by the first 30 minutes of trading. And after that, it was really off to the races. Now, the arbitrage score is still intact after the market opens. So later in the morning, you can see here, we all of a sudden started looking at a market that was up 20 to 25 basis points. So now the roles are reversed. The flat line is the flat line. Expectations are the expectations. And so the opportunity then becomes to fade this rally here. The market drifted sideways for the next hour or so. At about 12:45 Eastern time, the market really started exploding higher. That was when I made the decision. I got my 35 basis points that I was looking for on the downside. I got the 35 basis points on the upside. One big problem. Why was the market going higher at this point? The answer is the fundamental dynamics of the day had really changed after it was announced that Nvidia was going to be investing $100 billion into OpenAI's effort to build data centers. We're going to be a nation of data center farms. It's crazy. They're covering the entire 50 states of the union. And it blows my mind. And it's blowing the top off of this market. So the mistake I made today, I made a trade based on the daily arbitrage that was calculated prior to the market. 9 times out of 10, that's okay. But when you're making a trade literally in the middle of the day, there's often a reason for why markets are moving the way they're moving. And in this particular case, that news would have been enough to change my factor score. But I didn't recalculate the factor score, right? Mistake. That was just a flat out mistake on my part. And uh, the missed opportunity here made worse by an actual fading of this rally that did continue right up into the close, making today's daily arbitrage uh, doubly painful. One, for the missed opportunity. Two, the trade that we actually made turned out to be a complete washout. So I just wanted to share that with you. It's not something that happens very often, these midday types of trades, but mental note, you've got to rejigger your calculations for expectations to factor in new data points because there are throughout the trading day, oftentimes there are going to be new data points that we can hang our hats on and use to uh, for predictive powers as to where the markets should be going and then triangulating a new trade. Anyway, I'm getting deeper into the weeds than I wanted to get. Bottom line is missed opportunity today. That's all I have, folks. This is JD for the Rational Trader. I'll be back tomorrow with another video. We have a mean reversion cash machine set up on Micron. So make sure you check back tomorrow. I'm excited to bring that trade to you in tomorrow's video. This is JD for the Rational Trader. Take care, everybody. Have a great day. Good luck with all of your trading, and I'll see you all next time.